Hello and welcome to another tutorial video here from Zenatta Consulting. My name is Tyler Colt, and in this video, we're going to be going over tax management inside of Zoho Books. I'm going to show this both for like service type items and goods type items, just so you can see some of the differences in how those are set up. Before we jump in, I do want to ask if you find this video useful, please be sure to like and subscribe down below. That really does help us out. And make sure to leave any comments, questions, or feedback down in the comment section below, as we do try to read through each and every one of those on a weekly basis. So without any further ado, let us go ahead and jump on into the walkthrough. So here inside of Zoho Books, I'm just in a demo account here, and I've got two different items set up. So one of these items is a good, right? So like a physical item that I purchase for a price, and then I resell for another price. We'll go ahead and just put a unit on here while we're in here. So I'll go ahead and click save. Then we've got a service item, right? So this is something that we are doing on site. So maybe like you sell a router and you sell 5 hours of work to install it, right? Whatever it may be. As you probably know, goods and services are oftentimes going to need to be taxed differently. So I thought it'd be good to have an example of each of those as we go through this process. So to actually get started and turn on tax calculations for your account, you'll go into settings up here at the top right. And then under tax and compliance, you'll have this tax option here. I'll also highlight you can search. Zoho Books likes to rearrange this page. So if you don't see it here, just go ahead and give it a search. And we open up taxes. First thing we're going to actually need to do is enable the sales tax. Now, there are two ways to calculate taxes in Zoho Books. I'm going to show you the normal way today, where you'll actually be manually configuring tax codes, associating them to items. It is a bit of a process. The other way here is to integrate with Avalara, which is a great little segue here to talk just for a moment about the sponsor for this video. Surprise, surprise, it is Avalara. We now have a direct relationship with them and help many of our clients configure and set up their tax management in Zoho Books using Avalara. It's a great platform, super useful if you're selling in multiple states. So I'm looking at you like e-commerce sellers or larger businesses where you're going to have to interact with the specific sales tax codes of cities, counties, states themselves. It really just does everything for you. It's going to calculate things live right inside of Zoho Books on all of your transactions. They stay up to date with all the changes that occur to taxation in various regions, which can be regular and significant. So well worth taking a look at, especially again, kind of like Zoho says, if you're selling in multiple states, we highly, highly, highly recommend it. We've got a link down below. It'll get you direct access to a demo that you can get in touch with Avalara, talk to them about your needs and see if it may be a good fit. I'm telling you, it's way worth a quick 30-minute call with them to see if it would make sense to use Avalara instead of doing this manually. With that out of the way, I am going to show you here how to do it manually, because for some people, that's going to get the job done, right? And that's totally fine. Then you don't have to license with Avalara. So first thing we're going to do is actually just enable sales tax as a whole. So it does kind of a quick setup in the background and just activates things. And really what we'll see here is like 4 main sections inside of the tax configuration. So you have tax rates, you have tax exemptions, you have tax authorities, so like those who you would actually be paying tax to. And then you have kind of this tax settings area, which really just does like one main thing, which is enabling or disabling the ability to override tax in sales transactions. I recommend leaving this off. If you have to charge taxes, you shouldn't allow your team to override them. And so to actually get started here, it's a little counterintuitive. You kind of start at the bottom and work your way up. So a tax authority is essentially a particular group or agency that you're going to need to pay taxes to. So this is where things can get a little complicated, right? Like let's say you're in Ohio and you're selling into the city of Cincinnati. You might have a tax authority in Cincinnati as well as the state of Ohio as a whole that are charging you 2 different and specific tax rates for particular items. We're going to keep it on the simpler end of the spectrum as I go through this walkthrough, but just understand that this can get a little bit confusing. So here I'll kind of do that example. I don't know exactly what it's called off the top of my head, so hopefully I'm getting that right. But so we'll essentially set up various tax authorities within particular states. And so in our case here, And I remember this from living in Cincinnati. I had to pay this was in the income tax bracket, but I had an Ohio tax, and then I also had a Cincinnati tax. So you will actually see that specific areas will levy additional taxes for your items, or even for some specific item types, right? Because different items can be taxed at different rates. So here now we have these two tax authorities. Next thing we'll do is we'll figure out if there are any particular tax exemptions that should be available. Now, an exemption can either be for a customer or for an item. So a really common like customer level tax exemption would be something like a nonprofit organization. They might be excluded from taxes or specific taxes based on the items or services that you are selling. Another one here on something like an item might be for like a service, right? Maybe you're selling into an area where a service is not taxable. That's a pretty normal situation to be in. One important thing is that you really do want to make sure that like if an item isn't taxable, don't just not associate a tax rate with it, associate the exemption with it. You want to make sure that you've really crossed every T and dotted every I and make sure that you're going to be fully compliant here. Last one will be our tax rates that need to be configured. And again, this is where things get very, very specific, right? So you could have multiple different tax rates for different types of items, right? A really common one would be like, hey, we have clothing. Maybe that's 6%. Don't quote me on the numbers here. But then maybe you'd have something like food items, right? And those might be 2% or 1%, let's say. But then on top of that, you might have another tax where maybe food is, 1% in Ohio, but an extra 1% in Cincinnati, right? So you can actually end up having these like stacking tax rates that are specific within a very particular region and area that is levying the tax for that item. Of course, you're going to have a lot more options here, right? Especially if you sell a wide variety of items, you really need to go into the tax codes themselves, make sure that you've configured all of these that are appropriate for the goods that you're selling, and then configure them all in here inside of a tax rate to make sure that things are good. Now, I will highlight one more little note here that the default tax rate will be used in transactions where a customer preference is not already configured. So what you oftentimes are going to want to do is just come in and make sure that you've set like an appropriate generalized tax rate to make sure that if all else fails, you are paying something, right? And if you have to adjust it later, you have to adjust it later, but at least you're not paying nothing into that sales tax account. And so what I went ahead and did there just to make sure that we have this set up is I did just rename the clothing tax to the default tax. Just to make sure that we have this one lined up nicely. It looks like it kind of likes to keep the first one you add as the default. And then I just added a new version of it for the clothing in particular. So now let's actually go back over to our items because we're going to need to associate particular tax rates with those items to ensure that everything is going to calculate appropriately when we actually set up an estimate or an invoice to go out to a customer. So within a particular item, I've opened this up and I'll click edit up here in the top right. And what we'll see is that this item has a particular taxable or non-taxable preference. So in our case here, because we're working with a good, this is going to be something that is taxable. So we're going to leave this exactly as it stands. If I jump over instead though to our service, right, maybe this is something that's not taxable, right? And so I can go ahead and select, hey, this is not taxable. And what it's going to do is understand why, right? It's like, okay, most things are taxable. Why isn't this? Maybe you're doing professional services like we do, right? And that's not something that you need to assess sales tax for. So I can go ahead and just configure that exemption reason. And so there is one thing that you may notice here as I'm looking at the taxes for a particular item, and that's that we don't actually get to assign that tax rate here for the specific item when we're using the default tax rates functionality here within Zoho Books. And the reason for that is that technically speaking, the way that it really works is that your tax is going to be levied for that item based on the particular location of that client, right? So like in our case here, maybe we're going to be working with this demo account client, and I'll go ahead and just make this look kind of nice. I'll make this a Ohio client. And then we'll go ahead and click save. And so what gets kind of tricky, right, is that really you're assigning particular tax preferences to your customers, right, based on particular different items or goods that they might be selling, right? So if you primarily sell a particular type of item to them, you can associate that tax rate. We're here going to use the default, right? Because we might have different types of items that are going to be taxed. Or you can actually set up that customer to be exempt from taxation based on, any of those customer level exemptions that you have configured. This is really where I can't say enough how much easier life is when you're using Avalara when you're selling into multiple states, right? Because honestly, if everything's in one state, this is probably going to be good to go for you. It's not going to cause you a lot of pain and suffering. But if you're in multiple states, it really does make things more complicated. So here, if we jump into an estimate, right, and we start adding some items, let's go ahead and grab that Zenatta portal customer here. We'll see that it does pull in their default address and that default tax rate. And that tax rate will be applied as a baseline to any of the items that you add to this estimate, right? So if I were to go ahead and drop in that example item, it's applied that default. But then I might actually need to come in and add a different one to this, right? And actually be able to associate the specific type of tax that should be associated for this item. The big benefit on the back end with something like Avalara is that each item gets classified into what's called a tax category with a tax code. And then on the back end, Avalara will look at the customer, they'll look at what state they're in, and they'll just auto apply the appropriate state, city, county specific tax when you're making these estimates. Because what gets really complicated, right, is let's say that we have this food tax and then the food tax in Cincinnati. Well, by default, I can't add them both when I'm making an estimate, right? And I'll show you how to fix that in just a moment. But let's say we have that default tax. Let's put in our example service. This is going to come through great. It's not taxable. That exemption is set up on the item level. So that's going to override any places where the system would try to associate a tax with that item. Let me go ahead and actually show you here how we'll solve for this food for Ohio versus food inside of Cincinnati tax situation. So if we go back into our settings, we'll leave and discard our changes. We'll be right back to that estimate. We can jump into taxes, and what we'll need to do is create what's called a tax group, right? Because a tax group is something like, hey, we have taxes in Ohio and in this particular city for food. And so I'll need to sub-select those two and call them the Ohio plus Cincinnati food tax group, right? Because we actually need to apply both of those taxes to calculate our sales tax appropriately. Again, this is one of those places that adds a lot of complication when you're doing this manually. So now if I come back into my estimate and I create a new estimate here, we'll grab that same demo customer and I'll add the item. Now I could override it and say they're going to pay this group of taxes that are applicable for both the state and the city that are levying unique taxes against this particular type of item. Again, we'll go ahead and add our service and kind of move through the process. What you will see is that all of these taxes are going to come down here and kind of break down into this tax section. When you have a group, it will show each tax that's been assessed individually and then sum up the total for you, just so that you and the client can both have that overarching view of exactly what taxes are being assessed. And you'll see that on this estimate document as well. So when you send this out, they'll see that breakdown and it won't be a mystery of like where these taxes are coming from. Now, when I mark this as sent, and then maybe let's convert it over to an invoice, all of those taxes are going to apply. So I'm going to save and continue. And now in our in our invoice document here, we'll see that exact same sales tax configuration that we had in our estimate. And when we look at the PDF, you'll see that same thing here, right? It's all just going to be categorized under these two different taxes that are a part of that tax group that we associated with the item on that estimate. And so again, as you can see, managing taxes correctly using that default functionality will require a little bit of configuration, and it will also require the users to be pretty intentional about selecting in the appropriate taxes for the items that are being sold. One of the biggest pieces of advice I can give you on kind of how to make that work most smoothly is make sure you have a default tax. Most sellers, right, you're probably selling pretty similar items, right? Like it's pretty rare that someone is selling like clothing and food and raw materials and, all these different types of items that might have unique tax situations. So a lot of the times, again, if you're in one state, you're going to be able to get away with doing that default tax, making sure everything looks good there, and then maybe making an adjustment at the end of the year to ensure that your taxes are all set up. We'll kind of jump into that in just a moment. But again, when you're selling cross state, things do get a little bit more complicated. So now let's actually go ahead and jump into some of the accountant tools for managing and accounting for sales tax. All right, so in this invoice, what we're going to do here is we're just going to take this through the process, essentially mark it as sent and mark it as paid, just so I can show you exactly all of what's going to happen on the back end with those taxes that have been assessed for this invoice. So here now we have this paid, we are good to go. This transaction has been completed. So what's going to happen to these $2 of tax, right? And a lot of that is going to live here under your accountant settings. So right out of the gate, in terms of chart of accounts, we'll see the taxes will all come into this tax payable account, right? This is a liability, right? This is money that you have accepted in, but you're going to have to pay it, right? So this is a future spend that you're going to make. So we classified as a liability inside of Zoho Books. And you'll essentially just be able to see exactly the customer, the invoice, and where it came from as we're looking at those transactions. If you need any more detail, you can click that little more detail button and it kind of breaks it down a little bit more granularly. A lot of the times this is how you're going to do it, because then you'll be able to filter and kind of slice and dice the data as you're looking at the particular tax payable account. So back to our accountant setting, again, everything there is going to flow into tax payable. Now, when you actually get ready to make a tax payment, what you'll do is generate a tax due. And so here, basically what we're saying is show me all the taxes that are due to a particular authority that have been paid within a particular period, right? So maybe I'll look at like the month of June, right? You're probably not paying sales taxes monthly, but you'll essentially now be able to see all of these tax authorities, as well as the dates and what is actually owed for that authority. Now, to actually complete this loop, you will need to configure a linked bank account that will record those tax payments, right? Because what's going to happen is you'll essentially start this, you'll see the money come out of your account, and then you'll connect that bank transaction to this tax due to kind of connect what you said you're going to pay with what you're actually going to pay. And so in our case here, again, because we have those two different groupings, we have the Cincinnati and the Ohio tax, we would actually have two taxes due, each for $1. Now, of course, this isn't something that you're going to do on like a monthly or weekly basis, right? Like maybe quarterly, most likely yearly, right? So if you're not selling into a huge amount of tax authorities, this really isn't going to create a massive amount of work for you. But it's just something that you will need to do for each of those tax assessing authorities in any of the areas where you sell. Now, the other element here is actually to look at particular tax adjustments. What you will notice is that you don't see anything in here that actually allows you to create one. So let's take a look at how you would actually create a tax adjustment. And so when it comes to tax adjustments, you are actually going to need to create those in relation to some type of tax payment that has been generated via this tax due functionality. So we're not going to be able to do that here because, again, in this demo account, I don't have a connected bank account. Essentially, what you'll be doing here if you do need to make a tax adjustment is you will choose a particular tax payment and apply an adjustment to it. You'll choose that amount and the account that it should go into, basically saying like, where should this go? This new like transfer of money that I'm denoting, right? So a common one might be like you underpaid, there's some type of penalty, and now you need to do an adjustment into your other expenses category. And so you're able to apply those here. Once you save them, they will show up as essentially a related item to that particular tax payment. And then you'll be able to see all of those under your tax adjustment category. So I think that should basically cover it here for the world of manual tax calculation inside of Zoho Books. Like I mentioned, we really can't recommend Avalara enough if this is a process that you're going to need to do for many different states and jurisdictions. It will save you a massive amount of time and it will essentially prepare all of those end of year documents for you so that it's really like set it and forget it when it comes to calculating your taxes. But we do know that for a lot of people, you might be working within one state. maybe you're a local service provider with some goods and services and your tax situation is pretty simple. I really do hope that in that case, this guide gets you where you need to go, and you'll be able to configure everything you need to stay compliant and be able to know exactly what you're going to need to pay at the end of the year. As always, I really do want to thank you for watching. If you found this video useful, please be sure to like and subscribe down below, as that really does help us out. If it sparks any questions, feedback, or additional video requests, please leave those in the comment section below, as we try to read and respond to as many of those as possible on a weekly basis. Thanks again for watching, and we'll see you next time.